G'day everybody, this is Johnny Seville from Acorn Wealth Corp, and this is your executive summary for stock setups for Tuesday. Well, let's have a look at what's obviously happened today. The S&P 500 obviously set, well, we're looking at the SPY here, but the SPY or the S&P set its open range on Friday. The high and the low of the candle you can see on that blue candle there. So what we were looking to see was whether we closed below that range or above that range. And today, as you can see, we obviously closed below it. And that, so I sent out a text message for everyone who has cell phones connected to their Acorn account early this morning and said, look, it looks like we're going to be a bearish open range. Time to start getting short. And as you can see, we've definitely closed in a bearish open range. Now, if we take a look at zooming in as to how bad the open range could be, how bearish the open range could be. Firstly, just keep in mind that we have been in this upward channel this entire time, this macro upward channel. We've now had, you could say one touch back here, but certainly one touch, two touch, three touches now, certainly three strong reversals off of that support. So if we come down to this this touch on the channel now, this would certainly be the fourth touch, possibly the fifth. So that's one sign. As you can see, we haven't been able to bounce with the vigorousness, with the vigor that we have in all the previous bounces. So the bullish bounce lost steam. And for those of you who've been with us for longer than a few weeks, obviously we published a report on Thursday night. On Tuesday, Wednesday, Thursday, we warned everyone that, hey, the amount of stocks that are going up, more than 2 or 3%, are half of the amount of stocks going down more than 2 or 3%. So all of the move, even though the market was going up, more stocks were actually moving further down than further up. So that divergence alone said, yeah, short covering rally. We also looked at the fact that the stocks that were going up were the ones that were previously the most heavily shorted, the ones that had dropped the most. They weren't the good companies. So again, that told us not a quality rally. Also, the way that the S&P was rallying was oscillating. Instead of momentum. So as it rallied, we were also looking at where that oscillating resistance was, which was right here, the previous sharp reversal that we saw on October 17th, which of course therefore was our target, and that's where we stopped. And of course on Friday, November 9th, we said, this is probably the top of this rally, and we published our 5 favorite short picks for you to follow. Now, what we can see is that since then we've had quite a nice drop in the overall market. So we've been pushing down from that target, and then again we set the open range here on Friday, and we're now bearish. Now, let's zoom in to take a look at the hourly chart. Now, if we take a look at the hourly chart on the SPY, take a look at what pattern we get. Can everybody see the head and shoulders there? This is basically summarizing all of the movement we've had in November to date. So it's encapsulating the whole bull move that's now reversed. And if you look at that shape, that of course is quite likely a head and shoulders. So on the hourly chart, on the SPY, we are seeing a head and shoulders pattern, and that definitely seems the most likely, most probable pattern. Again, all about patterns and probabilities. So we look at that pattern. I look at to where that would suggest it's going to extend to, and that would take us down to 258 on the SPY. So by looking at the hourly pattern, we see where the target would be. We then zoom out, and we take a look at the daily chart, and we say, okay, 258, where would that be? Oh, well, that would be below the channel. It would certainly, if it gets to 258, be a new low as well. So if the head and shoulders on the hourly chart were to play out, that would break through that support. So that's very interesting, of course. And that would be again, if we break the channel on the S&P, then we would see that we would then be looking at a target of a channel breakdown, which would be a breakdown towards 228 on the SPY, which would be a very bearish break. That would, of course, be a 13% decline from that channel, and it would be a 15% decline from where we currently are at today. So that's the worst case scenario. Now, if we look at high yield bonds, one of our smart money indicators, you can see that high yield bonds also in a head and shoulders. We had that left shoulder, the head, and this was once more why we suspected a rally would happen, because we were at the bottom of that head and shoulders. It rallied up to complete the right shoulder and has turned straight back down. And once again, that is now falling, and we can measure the head and shoulders there and see where that takes us to. And as you can see, that takes us down towards 82 as a target. But now we're starting to get into bearish territory. Now that's where the market had found some support previously back in June of 2016. But look, this could be a different ballgame. The more important thing to take away from this is you can see how the smart money indicators have come together that also allowed us to predict that the market was going to roll over on November 9th, which it did. And why the rally wasn't a bull rally, but rather an up that was part of a down trend. And this again is why patterns show you what's really going on by following the smart money. So by looking at these things, these of course told us bearish territory. So in terms of how I have approached this, some of the things that I sent out today, of course, that we took for a. I'm just bringing up my interactive brokers account. In terms of a market trade. Now, I don't normally trade the market. I prefer individual stocks. But when I started to see this happening, I bought some January 2019 $13 calls on TZA. So I picked a bunch of those up to play the with this is a triple bear ETF. So if the Russell 2000 drops, this should go up approximately 3 times whatever the Russell drops by. Now, I already hold a position in TZA, the stock itself, but I wanted to leverage that because if this really drops, let's make a bunch of money kind of approach. Now, that's not for everyone, by the way. Options are very risky, and when I buy an option, I basically I'm willing to lose everything I put into it because it's difficult to manage with stop losses and so forth. Because I typically don't watch the market during the day. I like to automate everything, as probably you all know. So these are things I like to set up at night and just say, hey, if it goes up, buy, sell at these levels. And so TZA is something I bought some $13 calls on to have a bit of fun, but I do hold a stock position in this as well. And then the other thing that I bought, so TZA is leveraging the move of the Russell 2000 if it breaks down, and the Russell 2000 has a target of 141 for me after this original breakdown, because the Russell 2000 had already broken down from its channel, as you can see. That short-term channel there, and then it has a longer-term channel there. So the short-term target is 140 or 141, but then there's a longer-term target of the larger channel, which could take us down to 134. So I've played that move. The other index that seemed to be moving bearishly was, of course, the QQQs, the NASDAQ. And as you can see, the NASDAQ had already broken down from its channel, retraced inside, and then has broken back down. So I wanted to take advantage of that as well. So in order to short the Nasdaq, I took a position in SQQQ, and that for me was just a stock position. And again, this is a triple leveraged. It's an ultra short inverted ETF, and I've currently got my stop loss in around 1380. I may lower it a little bit, but I think 1380 is going to be fine. And that's a way that I've been able to take larger positions in, say, the stock TZA and the stock SQQQ because it's very liquid and it doesn't have, it's not attached to earnings or anything like that. So I shorted the market by taking positions in options on TZA. Already held a position in TZA, the stock, and a position in SQQQ. So those were a couple of moves that we've already done. Now, in terms of looking at in some individual stocks, I want to highlight here for you the new ones first. Now, so let's take a look at those. Now, I've tried to order these in the order of the most insider selling and optionable trades as well, kind of higher up. So just to give you kind of the more heavier insider sellers first. NTAP, of course, is a stock we had already alerted earlier this year. Now, we talked about it in Trading Room that on the option trade side, this wasn't a stock that I was going to stop loss out of. I was going to hold the puts. I bought December this year, $55 puts in this stock, which I still hold. So as it rallied, because it was rallying up to meet the trend line resistance, I wasn't going to sell this until the stock really, unless it completely changed character. So although I entered around when it was around 76 or something, as it squeezed me to the way up, I held through it because the pattern was still strong. So I'm still holding NTAP, again, a $55 December puts, but this is looking great, and this still could be an actionable trade. If this were to break below $66, this could be a new potential entry. And I would consider a stop loss on this one based on that trade setup at 74.13. This would be a momentum short, but I would have at least a target in mind here of $48.13. So at this point, I'd look at longer term options. I'd be looking at the January 65 puts, which are currently $2.95, and there's huge insider selling on NTAP. GWRE is the next one. Once again, if you take a look at the pattern, you can see the presence of this head and shoulder, which is exactly what we want to see. And as you can see, it's a very tall head, so that this gives us plenty of opportunity to the downside if we break down. I mean, as you can see here, the target could take us all the way down to $60. So GWRE certainly looks very interesting. I'd look to see it break below 79.86. My first target would be 61.33 based on the head and shoulder. There's huge insider selling, like high double digits of insider selling, and from the CEO types of people, the insiders, the board of directors. So that's always a great sign if you're looking for a short. And I'd look at the stop signal to begin with at 88.35. However, this would be quickly adjusted as it dropped. So here's the first two. Now, I have a few of these short setups for you because I like to, instead of publishing 3 or 4 or 5 shorts every couple of days, you're going to see me more focusing on a group of great setups around when we have these key breaks. So we had 5 or 6 setups on November 9th. So this is your next batch. So I wouldn't expect to be adding too many more to this until we get to the end of the month and a new open range. So GWRE looks great there. TCX is the next one. So again, each of these, some will be more optionable than others. So again, another reason why I want to give you a few different options. So there's something here for everybody. Now, Two Cows TCX, as you can see, actually has a really a potential descending triangle formation here. And when we look at that pattern, that tells us that we could have a possible breakdown all the way to around $28, $29. So the beautiful thing about this is, once again, huge insider selling. So I would wait for this to break down first to confirm the pattern. So I would be looking for a break below 49.25. My target would be 39.23 as a first target. Excuse me, first target, and so that brings us in around there, where you can see this that big flag formation type of thing came from. So 39.23 would be my first target. $30.53 would be my second target, which is the drop towards that the descending triangle. So you could consider February $50 puts, for example, depending on how much liquidity you need. You can take a look at that. But I'd be looking, for example, around February for $50 puts, which are currently 165. TRTN. Now, this one was actually one we had originally looked at as a upward channel breakdown. Now, it broke back into the channel, and here it displays some other characteristics. And can you see it? Can you see it, folks? Once again, aha, there's the possible head and shoulders. Bam. So we're right at the top of a right shoulder, potentially. So with TRTN, again, medium level insider sellers on this one, but still solid. Possible head and shoulders, so could be a possible short here at the current price. And because I mean, with an oscillating pattern, you want to sell as close to resistance as possible versus waiting for it to drop. We've also got the open range going in our favor. So I'd be looking at a stop signal at 36.23, a target 1 of 29.13, and a target 2 of $19.57. So again, medium insider selling, but big dollars. BBY is the next one. BBY we also sent out as a text message today when it was around, I think it was around $64, maybe even closer to $65. But we sent out a text message on this one that we liked this as a short. Now the stop signal I mentioned in the text message alert was 68.13. The puts I suggested taking a look at are $62.50 puts, which are $4.25. The first target is 58.33. The second target I'd be looking at would be 53.83. So still looks good, and nice free fall there from Best Buy today. Ended up closing 6.37% down. Weight Watchers and medium insider selling on Best Buy. Weight Watchers is just about to break down through, again, kind of a descending triangle type of formation. You could almost look at that as a wedge, but again, I like this one as well. Insider selling once more, and so this could be a possible short setup if it breaks below 46.87, which it almost did today. The stop signal I'd be looking at would be 55.27. First target 37.87. Second target 33.33. Big insider selling, and so if you're looking at these kinds of things, you can go and have a look at Yahoo Finance, for example, if you're looking for a put. So once again, the rationale that I'm using when looking for puts is pretty much the same across the board. I'm going into looking at, for example, where there's a couple of months out. So aggressively, at this point, I'd be looking at January or April. So if I was going aggressively, and I'm looking at Weight Watchers to drop to around 37.87 when it's 47 now, I'm probably going to look at, say, for example, the and this is being short term, I'd probably be looking at the $45 puts, which are 265. So the Jan 45 puts, 265. If I was going to be going a little bit further out to buy some time into April, then I'd probably be looking they start to thin out a little bit more there. Not so many puts there. So but if I were to be, I'd be looking at the 50s. Excuse me, not the 50s, the 40s, which are 281. So gives you an idea of what I'm looking for there, going a couple of months out and close enough to within 5% of being in the money. Um, so there's Weight Watchers. As we go down the list, and that has big insider selling. As we go down the list, NOW now. I'm looking for again, this was something, if we just go back to our normal template, where I've got the lines already drawn. Now is something that, again, I liked a lot. We had this upward channel that broke to the upside into another upward channel. It kept gearing higher and higher in patterns that are meant to break down. And then what seems to have formed, you can see I've marked it in the red, is now a head and shoulders. Head and shoulders that now is trying to break the support that we haven't been able to break yet. There's great insider selling, 33%, 20%, and 2% amounts, all $1 million amounts from the CFO and CEO, I believe it was, CRO, I should say, the Chief Financial Officer and the Chief Revenue Officer. That's good. So again, with now looking for a break below 154.95, or if it rallies up a little bit towards 164, that could be possibly a rally re-entry. The stop signal I'd be looking at would be 175 and 13 cents. The target would be 110 and 27 cents. Medium amounts of insider selling. FIVN. This one also, again, have a look at this. You can see, there you go, there's the head and shoulders pattern. Once again, the same scenario that we're seeing in a lot of stocks. So that tells you, that warns you of something. FIVN, head and shoulders, stop signal I'd be looking, so it could be an entry if it breaks below $37.87. So we're waiting for the head and shoulders to break down, or at least break down through this moving average. And I'd be looking at, so again, looking for a break below $37.87. Stop signal I'd look at would be $41.56. My target would be $26.33 based on the head and shoulders breakdown and the target. Now we're going into the ones that have little insider selling. So FIVN has some insider selling. JBL is something that obviously has already been a great performer. JBL broke down to our target. This was originally a short we found up at $30, broke all the way down to 24, which was our target. Was perfect. But if we go to the weekly chart, you'll see the interesting thing there is the longer term potential head and shoulders. So JBL may still have some life left in it, and what I'm looking for is for it to break below 23. So I'd look to see a break below 22.87. And my target there would be looking at 1863, which comes to where that support level is. Stop signal I'd look at would be 25.26, some insider selling. And last one, which of course is already an alert, which is Michael Kors, Kors. It's in free fall territory. So if you're holding this one, again, we alerted this back at $68. It's now just continued to break down from $68 all the way down to 44. Hope you're in that one. But still looks great. This could still fall, still has momentum, and the stop criteria I'd be looking at now is 48.33. Looking at this to continue to break down to 38. So as you can see across the board, there's some excellent short opportunities. So again, I've gauged these from the stocks with the highest amount of insider selling down to ones which have less insider selling towards the bottom. But I like them all. They all have high quality. Some of the ones, though, that did jump out at me, not to say that they're better than the rest, but NTAP, I mean, I already hold puts in that, GWRE, TCX, TRTN, I mean, they're all good. So, if you're looking for a way to gauge the smart money level, look at the insider selling, look at the Twigs money flow, and most importantly, trade a pattern that you're comfortable with, or maybe that you prefer. So that's what we're here to teach you. And again, the market could go up still, but right now all the signals are pointing to the down direction, and these are my favorite ones for the next 10 days that I feel meet all that criteria we're looking at. Now we'll continue to monitor these and cover these over over the week and a half to come with updates as we follow these stocks along. Some might trigger, some might not. That's also why we like to pick a bunch, because you might find that out of the 10, 4 of them trigger tomorrow, and the other 6 might not trigger till the end of the week or next week. So again, you can get a bit of a choice there. So this is what we'll be following for the next 10 days. And inside tonight's email, in the email version of tonight's report that you would have gotten, I've also included a bunch of updates on some of those stocks we looked at earlier in the month. They've all been obviously dropping really well also. So again, thank you everybody. It's going to be an exciting couple of months ahead. Rock on. Happy trading.